Then there's the capital gains and dividends tax. It was 15%, now it's 20%. And once again, the higher that is, the less revenue the government actually gets. That's another story that isn't told. When we reduced the tax rate in 2001 and 2003, we collected more in tax revenue all the way up through 2005. The tax cuts kicked into full impact in 2003. The federal government raised $1.8 trillion in revenue. By 2008, it was $2.5 trillion. So when people say that tax cuts for the rich caused our budget deficit, no, it did not. It was spending that caused our budget deficit.
It brought in that tax cut actually brought in the largest amount of revenue to the Treasury in the country's history.
Right. We went from 1.8 trillion to 2.5 trillion. Those are real numbers, and once again, Republican office holders should call those numbers. They should use the numbers to indicate that lowering taxes brings in more revenue. Raising taxes brings in less revenue, which we are now experiencing. So it works every time it's tried. Okay, so those are taxes on investments that I just talked about. Anybody remember when Oprah Winfrey gave away the cars to everybody in the audience?
What happened to those people?
And then they got a bill from the IRS saying they owed a gift tax. And they didn't know that. They got this letter. What's this? So there's another tax that most people don't know about. Yes, sir.
Yeah. And one of the big things that a lot of people don't know about is when you lower that tax on dividends, the companies start, instead of chasing stock prices, they were able to start paying, really cut the tax on the dividends. And that's what makes a company grow, is dividends. I mean, chasing the stock price killed us.
That's right.
And if you can get people to hang on to that stock and pay a decent dividend, the capital's going to always be there. And they never talk about that.
It attracts more investment.
And if 9/11 hadn't happened, we would still be in the most prosperous time in the history of our country. But Bush had done a lot of the right things. Tax on dividends was one of the best things he did. And most people don't understand, because the promise of future earnings is what you get when you buy stock. Not to sell it for stock gains and all that crap and garbage that causes the problems. I'm sorry.
But if you have a retirement account, you want to get dividends.
Absolutely.
To build up tax-free until you're ready to cash out. So that's a big deal.
It's a real big deal.
And then, of course, there's the estate tax that we mentioned, which comes out of money that families have already paid taxes on through the generations. So it's a tax that has a very devastating effect to small family farms and family-owned businesses primarily. And once again, when that rate is high, it has a depressing effect on the economy. So all those, the origin of the income tax was actually the Communist Manifesto, and we did not have an income tax in the United States until 1913. And it was originally used, it was sold as a class warfare tool to punish the most wealthy. Most people were never supposed to pay the income tax, and of course that changed as we ramped up for World War I, and it stayed onerous really until Reagan brought the rates down. By the way, there was one major tax that Reagan increased in 1986, and that was on capital gains. The capital gains rate actually went from 20% to 28%, and the revenue plummeted on capital gains. And it helped create the stock market crash of 1987. So another story that's not often told, and one of the great things that President Clinton did for the economy is he signed into law a reduction in the capital gains tax from 28% back to 20%, and that led to the stock market boom of the 1990s. So a lot of us did very well in the 90s because we reduced the capital gains tax. So a lot of people need to understand that breadth of the tax structure. It's not just what's taken out of your paycheck that impacts you. So anyway, we all acknowledge that this tax system is very mutable. We added the taxes for Obamacare, and a left-wing Congress can change the tax code in ways that have very harmful effects to ordinary people. And a lot of voters don't get that information when they're discussing that. So what I've been a supporter of since 1998 is replacing all those federal taxes with the fair tax. And the fair tax was created by Americans for Fair Taxation out of Houston, Texas, a group of business leaders, including Robert McNair, the owner of the Houston Texans, who played football at the University of South Carolina in the 1950s. He was a poor country boy that got a football scholarship, worked his way through college, and went on to become a president of an oil company. And he's a billionaire. He was well aware of how our tax system harmed his business and others that he knew. So what they did is they wanted to get focus groups of people, just average people, and ask them, what do you want in a tax system? That was their starting point, not what some lobbyist wanted or what some politician wanted. And Charleston was one of the test market cities where they looked into what people wanted, and I got one of the phone surveys back in 1998. And my wife and I had just bought a home, and for you married men, you know how it is. She had to make all kinds of improvements right away, new cabinets and new carpeting, and who am I to say no? So we had to sell some mutual funds in order to pay for that stuff. And we had been paying taxes on those mutual funds for years, and that's where I started noticing capital gains and dividends, because every year as the stocks were appreciating, we were paying more and more in capital gains and dividends on the mutual funds. And then when we sold the mutual funds, the fund ownership had changed hands several times. So I bought the funds back in the early 1980s and had no idea what the original buying price was. And there were lots of permutations, so we had to pay somebody about $600 just to find out how much we owed the government on capital gains. So that was a jolt. There were a couple of teachers, and just felt some pain there. So when they asked, would you like a tax system where you're only taxed on something one time, I said, you better believe it. And so that's where the FairTax concept was developed. And there are basically three things that a majority of people wanted. The other two test markets other than Charleston were Traverse City, Michigan, and Fresno, California. So they took mid-level metropolitan areas with a couple 100,000 people as the test market area, and took people across the economic spectrum. And so there are three things that people wanted in a tax system. They wanted one that was simple to understand. Well, I went through all those layers of taxes in our federal income tax code. Einstein himself said there's nothing more complex than our income tax. So there's nothing worse than the system we have now. All of us called the IRS hotline on the same issue. We probably all get different answers. They don't understand their own code and their own law. So FairTax makes it really simple. Everybody pays the same rate at the register. So that's the simple part. We wanted a system that treats everyone the same. That's where the word fair came in. And we talked about General Electric. They have all these green energy tax credits. So they don't pay federal income tax, but Exxon pays tens of billions of dollars in federal income tax. Why should we favor General Electric over Exxon? That's not right. And also for individuals, we all have different tax credits that we qualify for. So we could have people in this room with exactly the same income, but vastly different tax liabilities. So with the FairTax, no matter what your income, you're going to pay the same rate at the register. Did you have a comment on that?
There's Jeffrey email that sits on the jobs board.
Right.
And they're sending jobs to China anyway.
That's exactly what they're doing. So a lot of people aren't aware of that. So it's up to people like us to make them aware of it. And then the third thing people wanted in a tax system is one that would not burden the poor and the elderly, people on fixed incomes. And we've got a mechanism in the FairTax plan called a prebate, which is an electronic transfer payment that goes to each household regardless of income. I should say each legal resident household on the first of each month, which covers your sales tax expenses for your necessities. So for a family of four, you would have to spend over $2,500 a month before you paid any net sales tax under the FairTax plan. So that's the idea, is to unburden the poor and the elderly, but it goes to everyone. It doesn't matter how much money you make. It's your prebate payment is based on your household size. And it's an electronic payment to your bank account, or you can get a smart card, or however you want to get paid. It's your money. Nobody is going to check what you spend it on. It's up to you.
Excuse me, is that up to the poverty level?
They use the poverty level calculations to figure out what it is, but it doesn't matter what you spend. If you're a family of four and you spend $2,500 a month on new goods and services, you get $2,500 a month of a prebate. But in terms of making up for the taxes, if you spend $5,000 a month, you still get the equivalent of $2,500 a month. So nobody's tracking your spending, but they calculate it based on the federal poverty level.